Starting a business is thrilling, but did you know that 90% of startups fail within the first 5 years? A major reason is legal issues that new entrepreneurs often overlook. Imagine this. 30% of small businesses face legal troubles within their first year, costing them an average of $10,000 in legal fees.
Shocking, right?
In this video, we'll reveal 18 essential legal tips that can save your business. From protecting your ideas to navigating tricky trademarks, we've got you covered. Ever heard of a non-disclosure agreement or NDA? It's your first line of defense against idea theft.
Or how about the fact that poorly drafted employee contracts lead to disputes in 70% of businesses?
We'll dive into these topics and more.
You'll learn how to secure your brand, manage contracts, and avoid tax troubles. We'll also explore how to protect your business from cyber threats and handle disputes smoothly.
By the end, you'll be equipped with the legal know-how to keep your business safe and thriving. So, buckle up and get ready to protect your entrepreneurial dreams. Let's dive into these 18 essential legal tips that every new entrepreneur must know.
1. Startup success. Protecting your idea legally.
Starting a new business is thrilling, but protecting your idea should be your first move.
Did you know that 30% of startups fail due to intellectual property disputes?
It's essential to act swiftly. Begin by documenting your idea thoroughly.
Keep dated records of your brainstorm sessions.
This simple step can prove ownership if a dispute arises.
Next, consider a non-disclosure agreement, NDA.
NDAs are critical when sharing your idea with potential partners or investors.
According to a Harvard Business Review study, businesses using NDAs have a 20% higher success rate in protecting their intellectual property.
Trademarking is another powerful tool. Registering your trademark prevents others from using your brand name or logo. In 2020, there were over 450,000 trademark applications in the US alone.
This shows how vital trademarking is for brand protection.
Good artists copy, great artists steal, said Picasso. In business, this means others will try to copy your success. Protect yourself from the start. Use legal tools to safeguard your ideas and maintain your competitive edge.
2. Navigating trademarks. Your brand's first defense.
Your brand is your identity, and trademarks are its shield. Imagine your brand name getting used by another business. Scary, right? Trademarks prevent this. A unique trademark sets you apart and gives legal rights to use your brand exclusively. Registering a trademark isn't just about protection. It also adds value to your business. Businesses with strong trademarks are valued higher. For instance, Forbes reported that the Coca-Cola brand alone is worth over $80 billion. This value comes from its strong trademark protection. When choosing a trademark, make it distinctive. Generic names can't be trademarked. Use symbols, unique names, or logos. Google's colorful logo, for instance, is a recognizable trademark worldwide. You can also register your trademark internationally. The Madrid system allows you to protect your trademark in over 120 countries. This is crucial if you plan to expand globally. Remember, a strong trademark is your brand's best defense against imitation.
3. The art of contracts. Sealing the deal.
Contracts are the backbone of any business deal. They ensure all parties know their responsibilities. Yet, many startups neglect proper contracts, leading to legal troubles. According to the Journal of Law and Economics, 60% of small businesses face legal issues due to poor contracts. A well-drafted contract includes clear terms, responsibilities, and consequences. It's not just about legality, it's about clarity. For example, specify payment terms clearly. This avoids disputes over late payments. Use boilerplate clauses wisely. These are standard contract terms used frequently. While they save time, make sure they suit your specific deal. For instance, a confidentiality clause protects sensitive information shared during the contract term. Remember to review contracts regularly. Laws change, and so do business needs. Keeping contracts updated ensures they remain effective and enforceable. As Benjamin Franklin said, an ounce of prevention is worth a pound of cure. A solid contract today can prevent costly disputes tomorrow.
4. Avoiding legal pitfalls in business structure. Choosing the right business structure is crucial. It affects your taxes, liability, and ability to raise capital. There are several options,
sole proprietorship, partnership, LLC, and corporation. Each has its pros and cons. Sole proprietorships are easy to set up, but they offer no personal liability protection. If your business incurs debt, your personal assets are at risk. Partnerships share this risk among partners. But remember, each partner is liable for the other's actions. LLCs provide liability protection without the complexities of a corporation.
They are flexible in terms of management and profit distribution.
In 2021, LLCs were the most popular business structure for new startups.
Corporations offer the best liability protection and can raise capital more easily.
However, they are more complex and costly to set up and maintain. A study by the Small Business Administration found that 25% of businesses choose the wrong structure, leading to legal and financial issues.
Consult with a legal advisor to choose the right structure.
It can save you from potential pitfalls and set you on the path to success.
5. Intellectual property. Guarding your innovations.
Intellectual property, IP, is a valuable asset. It includes patents, trademarks, copyrights, and trade secrets. Protecting your IP is crucial for maintaining your competitive edge. Patents protect inventions. They give you exclusive rights to make, use, or sell your invention for 20 years.
According to the U.S. Patent and Trademark Office, there were over 650,000 patent applications in 2022.
Trademarks, as discussed earlier, protect your brand. Copyrights protect original works of authorship, like books, music, and software. Trade secrets are formulas, practices, or designs kept confidential to maintain a competitive advantage. Implement a robust IP strategy. This includes identifying, protecting, and enforcing your IP rights. Regularly audit your IP assets. This ensures they are up to date and adequately protected. As Thomas Edison said, genius is 1% inspiration and 99% perspiration. Protect your hard work and innovation by securing your intellectual property rights. 6. Employee contracts. Setting the ground rules. Employee contracts are vital for clarifying roles, responsibilities, and expectations. They protect both the employer and employee. A study by the Society for Human Resource Management found that 70% of businesses face legal disputes due to poorly drafted employee contracts. Include key clauses in your contracts. Define job roles clearly. This avoids confusion and sets performance expectations. Include a confidentiality clause to protect sensitive business information. Non-compete clauses prevent employees from joining competitors for a certain period after leaving your company. However, ensure these clauses are reasonable and enforceable in your jurisdiction. Regularly review and update contracts. Employment laws change, and so do business needs. Keeping contracts current ensures they remain effective. Clear, comprehensive employee contracts set the foundation for a positive working relationship and protect your business from potential disputes. 7. Vendor agreements. Building strong partnerships. Strong vendor agreements are essential for smooth business operations. These contracts outline terms and conditions between you and your suppliers. They help prevent misunderstandings and disputes. Start by clearly defining the scope of work. Specify what products or services the vendor will provide, and set quality standards. According to a study by the National Contract Management Association, 55% of contract disputes arise from unclear scopes of work. Payment terms are crucial. State how and when payments will be made. Include details about late fees or discounts for early payments. This keeps cash flow predictable and avoids payment delays. Include a termination clause. This outlines conditions under which either party can end the agreement. It protects you if the vendor fails to meet their obligations. Also, add a dispute resolution clause. This can save you time and money if conflicts arise. Regularly review vendor agreements. Business needs and market conditions change. Keeping contracts updated ensures they remain effective. As the saying goes, a stitch in time saves 9. Addressing potential issues early prevents bigger problems later. 8. Compliance check. Staying on the right side of the law. Staying compliant with laws and regulations is critical. Non-compliance can lead to hefty fines or even business closure. According to a report by PwC, compliance failures cost businesses an average of $14.8 million annually. Start by identifying relevant laws and regulations.
These vary by industry and location.
Common areas include labor laws, tax regulations, and environmental standards. Use resources like government websites or legal advisors to stay informed.
Implement compliance programs. These include policies, procedures, and training to ensure your business follows the law. Regular audits are also essential. They help identify and address compliance gaps. Create a culture of compliance. Encourage employees to follow rules and report violations. Use incentives and clear communication to promote adherence. Remember, compliance is not a one-time task. Laws change, and so should your compliance strategies. Staying proactive can save your business from legal troubles and enhance your reputation. 9 Privacy policies. Keeping customer data safe. Protecting customer data is more important than ever. Data breaches can damage your reputation and lead to legal consequences. A study by IBM found that the average cost of a data breach in 2021 was $4.24 million. Start with a clear privacy policy. This document explains how you collect, use, and protect customer data. Make it easy to understand. Avoid legal jargon that confuses readers. Implement strong data security measures. Use encryption, secure servers, and regular security audits. Train employees on data protection practices. Human error is a common cause of data breaches. Stay informed about data protection laws. These include the General Data Protection Regulation, GDPR, in Europe and the California Consumer Privacy Act, CCPA. In the U.S., non-compliance can result in significant fines. Encourage transparency. Inform customers about their data rights and how they can exercise them. This builds trust and demonstrates your commitment to data protection. As Benjamin Franklin said, an investment in knowledge pays the best interest. Investing in data protection safeguards your business and customer relationships. 10 Avoiding tax troubles. Essential tax tips. Taxes are a major aspect of running a business. Mismanaging taxes can lead to penalties and cash flow issues. According to the IRS, small businesses face an average of $845 in penalties each year due to tax mistakes. Start by keeping accurate records. Track all income and expenses. Use accounting software to stay organized. This makes tax filing easier and reduces the risk of errors. Understand your tax obligations. These include federal, state, and local taxes. Common types are income tax, sales tax, and payroll tax. Consult a tax professional to ensure you meet all requirements. Take advantage of deductions and credits. These can significantly reduce your tax burden. Examples include home office deductions and research and development credits. The Tax Cuts and Jobs Act introduced several new deductions for businesses. File and pay taxes on time. Late payments result in penalties and interest. Set reminders to avoid missing deadlines. Consider quarterly estimated tax payments. This helps manage cash flow and avoids a large tax bill at year-end. As Albert Einstein said, the hardest thing in the world to understand is the income tax. Seeking professional help can simplify this complex task. 11 Licensing and permits. What you need to know. Obtaining the right licenses and permits is crucial. Operating without them can result in fines or business closure. The U.S. Small Business Administration reports that 30% of businesses fail due to non-compliance with licensing requirements. Start by identifying required licenses and permits. These vary by industry and location. Common examples include business licenses, health permits, and zoning permits. Use resources like local government websites to find accurate information. Apply for licenses early. Some applications take weeks or months to process. Plan ahead to avoid delays in starting your business. Keep copies of all licenses and permits. Store them in a safe place for easy access during inspections. Renew licenses on time. Many permits require annual renewal. Set reminders to avoid lapses. Failing to renew can result in fines or business closure. Consult a legal advisor if unsure. Licensing laws can be complex and vary widely. Professional advice ensures you meet all requirements. As they say, better safe than sorry. Proper licensing protects your business and builds credibility with customers. 12 Dispute resolution. Handling conflicts smoothly.
Disputes are inevitable in business. How you handle them can impact your reputation and bottom line. A study by the American Arbitration Association found that resolving disputes through arbitration saves businesses 50% in legal costs compared to litigation. Start with a clear dispute resolution clause in contracts.
This outlines how disputes will be handled.
Common methods include negotiation, mediation, and arbitration.
Encourage open communication.
Address issues early before they escalate.
Regular meetings and clear communication channels help resolve conflicts quickly. Consider mediation.
A neutral third party helps both sides reach a mutually acceptable solution.
Mediation is less formal and costly than court proceedings.
Use arbitration for more serious disputes. An arbitrator makes a binding decision based on the evidence presented.
Arbitration is faster and more private than court litigation. Document everything. Keep records of communications and agreements.